Good morning from Los Angeles. Welcome to Power Hour with Sergio every Friday, 10 a.m. Pacific, 1 p.m. Eastern. What is going on? The red hat is stuck to my head. Um, yeah, I think everybody's getting a little tired of it, but this is not even close to what a bear market is like. So, if we have rolled over and we're going to go in a bear market, buckle up, folks. This is the other side of the coin. Although some of your stocks may be in their own bear markets for a while, um, the indexes are on the cusp of, I don't know, hopefully not 10, another 10, 15%, but we certainly have rolled over, and all the generals are shot, and soldiers are not holding it up because rotation. The only thing that people are buying or institutions are buying are oil stocks, and everything else is being sold. Every industrial is being sold. Every base metal stock is being sold. As the title indicated, silver and gold crashed yesterday. Why? We'll get into all the reasons as far as I know. I'm concerned. And the war continues, although we don't get too much news out of it. I read somewhere that it's costing us $1 billion a day. Um, sure, I guess, right? I mean, we already have 39 trillion in national debt, so what's another 30, 40 billion? Still not sure why this is happening, why we're doing this, but at some point it'll all be cleared up, I guess. But there's definitely a massive correlation between crude oil and the stock market. There's definitely an algo. The one being bought, the other one is being sold. Although yesterday, oil going down and market kind of at the end of the day snapped out of its doldrum a little bit. And today we're right back to the sell side. Yeah. I mean, with all this, by the way, we're only down not even 5% from all time highs. So the resiliency is still there, but underneath the surface, a lot of stocks are just getting smashed, and they're all down 30, 40, 50, 70% in some cases. And we'll have to weather the storm, I guess, right? And this is the time you risk manage properly. This is the time you position size correctly. This is the time you be patient. You wait for your spots. Otherwise, you're going to get hammered. Now, there are a couple of things happening. Let's just put things into different segments. Crude oil in the Middle East, in Qatar and UAE and Saudi Arabia, they're trading way above spot, about $30 above spot. It's about 135 range. U.S. crude or crude in the spot markets is about, let's say we're about 105, 108, but there's something in our markets called futures, right? So if you look at the futures markets, it's telling a completely different story. The futures market are telling me that we're in backwardation. If you know what that means, if you traded futures in the past, backwardation means the back months of the futures are selling for 20% less than what the spot month is selling. So if you look at March crude versus anything else, September crude, for example, is trading like $85 a barrel, while the March crude is trading at 105. So why is that? Right? Well, that means the futures market is expecting for crude to be about 85. Now, if the front month keeps going up, doesn't mean that the back month is not going to go up, but backwardation continues. Usually, the future markets are in contango. Contango meaning the front month is the cheaper month and the back month is the more expensive month. For example, if you look at gold and silver and some other commodities, it's all like that. So that's one thing, that the oil market is not taking much of this. It's taking it in stride. So it doesn't mean that oil is going to be 85 anytime soon. I'm not sure. But the front month is not saying that. And there's massive amount of correlation going on between crude oil. And now we're going to get into why I think gold and silver dumped yesterday, and it's been dumping, is because a lot of nations bought gold and silver. Well, first of all, it's kind of a counterintuitive move. While gold and silver selling off, gold and silver, let's say, is an inflation hedge. People buy these things to hedge inflation, right? Inflation has effects, and we know what's happening to inflation in this country. We know what happened to gas prices in this country over the last 3 weeks. So that will add to short-term pain to the pockets of the consumer. And in an economy where 75 to 80% of the GDP is consumer spending, is the consumer going to slow down? But then if you look at the stock market is telling a completely different story, because I would have guessed by now market would be down at least 10% with oil shock happening. So in the past, that's what happened. But then that's why we have markets, right? Every time things like this happen, markets behave differently. And this time, yes, we're selling off, but it's more on the underneath the surface sell-off than the indexes. Because if you're holding the indexes, you're not really feeling that much of pain. Down 5% from an all-time high. But if you're trading industrials, if you're trading anything auto-related, if you're trading any other stocks, they're down massively, right? Financial stocks, for example, they're in their own bear markets already, and they're down 20-30%. And if you look at all the other ETFs, right, healthcare, financials, the only one that's behaving is oil, right? And now, how is this going to all resolve itself? What am I doing? I cut exposure as much as I can. I'm putting positions on sparingly. I have to be watching very closely at the end of the day, because I have options expiring. There are parts of it that I want them expire worthless. There are parts of it that I can get called away. There are parts of it I can get assigned. So I have to be on the ball here. And so the concern, my concern is what's going to happen to macro if oil prices stick around here, $110 a barrel for a while. The other thing is the Middle East oil selling $30 above spot. And we know what that is. There's supply constraints. Obviously, not much is coming out of the Middle East. The other thing is they're bombing each other's oil facilities, refineries. How long is it going to take for them to get repaired and get back online? I don't know. So it is definitely something to be careful about. And this is the time you don't have to be involved. This is the time you pull back. This is the time you cut size. This is the time to live for another day, because it will end, like anything else, it will end. But it's funny that on X, I don't see all these, table pounding going on anymore. Oh, I sell puts, I sell calls. I'm like, okay, well, this is the other side of the coin, folks. So be careful. There's risk in everything that we do. And disclaimer, this is not financial investing or trading advice. What I do is very risky. This is for information and education purposes only. Although I do post my positions fully transparently every Monday, Wednesday, and Friday on the community page of the YouTube channel, free for everyone to see. I suggest you do your own due diligence, and I suggest you do your own due diligence. Don't follow anybody, let alone, some stranger that's posting some screenshots, because people who post screenshots, they never lose any money. When the market's going down, they're always short. When the market's going up, they're always long. I'm not buying any of that. In fact, I've just pulled my, activity completely off the table on X, because there are a bunch of fools there that just kind of fools. They're a bunch of fools. So, trying to read the tea leaves here, folks. Today, by the way, is quarterly OPEX. Massive 4.7 trillion of derivatives is going to expire or get rolled forward. Should be an interesting. Usually, I don't trade much during OPEX, because there are other things that are going on that could be out of my control, and market could behave very wildly, especially the last hour or so. So I'm just kind of, putting some positions on, taking some positions off. I have positions that are going to, I'm hoping they get called away. And for example, I have a ZSL position, which is the 2x inverse ETF of silver. I have a covered strangle on that. The puts are going to expire worthless, obviously, but I'm hoping that gets called away. I have a position in BMNU. It's right at my strike. If they pin it there, I'll hold it for another month and sell some more calls on it. I'm very aggressive at the money calls because my cost basis is pretty low. But all I'm trying to do is just keep my powder dry, keep my head above water. In markets like this is not, unless you're short, which you should be. If you're not short, you're not going to make money on the long side in this market, unless you jump on some crazy stocks that I deal with all the time. So, but we'll go through the charts and we'll just see what the chopsticks are saying. So, good morning, Mike. Good morning. Hi, Faris. Okay. You need a new YouTube name. Hi. I had fun at Eid. Yeah. Okay, cool. There's a good one. Already maxed out my 24/5 pre-tax 401k contribution already. Awesome. That's a great thing to do. Just keep adding, and you're not touching the money. If you have a Roth IRA, I suggest you do the same. You could do some of your trading in your Roth IRA. And my goal is to inform and educate, and long-term investing passively will beat the pants off pretty much anything and everything you're trying to do trading-wise. And invest for the long term, right? Now, that doesn't mean you don't trade. You trade, you have some fun, on the side, have 2 separate accounts. I've said this a million times already. Understand the risks involved. Don't blow accounts, because Wall Street, you will have to pay your tuition to Wall Street like everybody has. And one thing you cannot buy or learn is experience. I've seen these movies before. It helps. It helps you not lose money, actually. More than it helps you make money, it helps you not lose money, and everybody is losing money. I mean, market's only 5% from indexes, basically. When I say the market, are 5% from all-time highs. I'm seeing everybody's accounts are down. If you're in a stock that's down 50%, your account's down 50%. Even if you're, I don't know, a lot of people talk about the same 10 stocks on the universe of social media. I talk about Hood and this and that, and I'm like, bro, there's like 10,000 different stocks. But rotation is fierce. All the money is going into oil stocks such as ExxonMobil, Chevron, Valero, Phillips 66, refiners. Those are just making all-time highs, 52-week highs. Everything else is being sold, such as Deere's and all the industrials and a lot of retailers, even the low-end retailers like Dollar General and Dollar Tree, they're all down 40-50% from their all-time highs. So when this ends, yes, there'll be a relief rally, but then I think the longer it lasts, the more economic effect this is going to have. Because as we know, they jack up the prices real quick, and then they don't bring it down as quick as they jack it up. So let's see what's going on. What happened? Oh. I thought I added it. Hold on, folks. Let me add my screen to this thing. I thought I did add. All right, let's share the screen. There we go. There's the screen. Let's go to this one. So now you guys can see the screen. If you have any questions, put it up. Oh, one other thing. I'll be around probably for 45 minutes to an hour. If anybody wants to show up, please show your pretty face. We can talk about anything you want to talk about, outside politics, of course. Here's the link. All I'm asking that you're in a quiet place with good internet reception, so we don't get cut off. It could be on my end as well. So let's go. Let's go take a look. This is the 2-minute chart, the S&P 500. After the initial sell-off in the morning, just going sideways. I am selling some call credit spreads actually on ExxonMobil. Actually, I'll go through the positions with you guys. So I have Iron Condor on AAOI. You guys can see this is one stock, all these positions, right? So I started with 85.82, then went to 83.80, then went to 78.75. Put credit spreads, those are hitting the wall. Then when they rallied, I sold some call credit spreads, 105, 108, 110, 113. So this is where I want actually AAOI to stay between 85 and 105. At the moment, we're at 90 with about 3 hours to go. Stranger things have happened, but hopefully we're going to hold our shit together. I'm long 1,500 shares of ADNT. I started putting on actually a risk reversal trade. Sold some put credit spreads on AG, Majestic Silver. I think we're going to have a bounce here. Not big positions, 10 lots, 15 lots. I added yesterday, actually. And so that's the April 2017 put credit spread. With that money, I went and bought 2025 call debit spread. I did it with about $1 credit, so I'm fine with that. Just today, I started buying ACCO calls, ACCO Corp. That stock is down about $45 from its high. I think we're going to get a bounce to 120. So I'm buying the April 120 calls. I bought about 35 of them so far at $1.35 cost. Long ASST leaps, that's been in there. BABA, this position was profitable. Now it's going red, but I'm short the 10 put credit spreads of 27, 25, 2x ETF of BABA. Here's the position that I'm long 5,000 shares of BMNU. I had sold the calls at 51 cents, $2 calls. My cost basis is right around where it's at. If I do get called away, I'm going to let it go. If it's above 2, it should get. If it's below 2, I'll sell another round of calls, $2 calls. Here's ExxonMobil. I'm shorting or selling 160, 165 call credit spreads. I think oil play is coming to an end. And the rotation out of these is going to be fierce. And last but not least, I had 2,500 shares of ZSL. It had a 10-for-1 reverse split, but I also had the 2 meaning short 2 puts, short 2 calls. Last month took in 96 cents. This month I took in 65 cents. But then after the split, I'm going to get called away, obviously. I'm going to let that one go. So the account's going to look pretty clean, actually, on Monday, especially if everything expires worthless. Although I was getting concerned with AAOI yesterday on the upside. Now I'm getting concerned on the downside with 89.60. Stranger things have happened. Hopefully we're above 85 and everything expires worthless. Bulk of my put credit spreads are 83.80s, but I'm also short 85.82s and I'm short 78.75s. The call side is done. So as an iron condor, as you guys know, you want your stock price to stay between the short strikes, right? Why do I do put credit spreads, call credit spreads in this type of volatile market? Its premiums are decent, but if you're naked, right, you're going to, this is exciting enough for me. If you're naked, these things, God help you. So that's where the positions are. I'll post them on the community page of the YouTube channel. You're more than welcome to go check it out. Except, as I said, none of this is trading, financial, or investment advice. It's for information and education purposes only. S&P has been stuck between 65.40 and 65.60. Looks like another ledge to fall off of, but then let's go to the big charts. This is the 2-minute chart. This is the daily chart of SPX going back a year, 1 year, 1 day. Everybody was watching the 200 EMA. That's broken. So next support is 6,500, which we're approaching pretty quickly. And next support is going to be, I would say, about 6,350. And then after that, the decent support is going to be at 6,200. So 7,000 to 6,200 is 800 points. It'll be about 11% correction. However, other things are falling off the cliff. All the generals in the Max 7 have been shot. With the exception of Google. This is the triple Qs. Triple Qs are violating the 200 EMA today. But if you look at the Mag 7, Apple, definitely taking out the 200 EMA today. There's some support on Apple about 242. We'll see what happens there. The other ones, the dog of the Mag 7 is Microsoft. It's been under his 200 EMA, rolled over again, retesting 380 to 380. I mean, that stock was 550, folks. We're at 380, 170 points, right? Okay, so when some of these fools out there, they go, I sell calls, I sell puts. I go, yeah, okay. Well, now what? 170 points worth of puts you sold? And then they go, oh, and I sell calls, I wheel. I'm like, really? Okay. No amount of premium you take in is going to make up for this 170-point pullback. And this is, we're talking Microsoft, folks. We're not talking Uncle Bob's software store. And Meta, same thing, breaking down. Amazon, same thing. They all look ugly. All the Mag 7 looks ugly. They're all rolling over. So we'll see. We'll see where we're going to go. Google is the only one that's holding its shit together at the moment. Although that could roll over anytime as well. But then, I mean, granted, it's down $50 from the high, but that's not much. But financials, definitely in a bear market of their own. JP, the big names especially. If you look at JP Morgan, under his 200 EMA, Goldman Sachs hugging the 200 EMA, just trying to hold, but stock 984 down to 800, about 180 points worth. If you look at Visa, it's worse. If you look at these. I mean, these are all bear markets. Look at American Express, right? I mean, look at that, right? Stocks 387 down to 280, 285, 100 points. That's 30%. So all the financials are in their bear markets. The only thing that's moving up the right direction is gold. So, I mean, not gold, oil stocks. Here's ExxonMobil, which I'm trying to sell call credit spreads on. You're going to say, well, why are you doing it? The trend is going up. Nah, I don't think it's going to last that much. And the rotation out of these is going to be fierce, and then they'll rotate into something else. All the base metal stocks. So this is one. This is Chevron. Anyway, so this is PSX, Phillips 66. Okay, let's go. Think or swim. What is going on? Okay, so this is PSX. Beautiful chart, right? Suncor. All 52-week highs. Right? This is Valero. Right? CVX is this is BP. They look like internet stocks. Look at these things, right? This is CVX, Chevron, all the oil stocks, right? Making 52-week highs. They've been moving up before this oil move and then just kind of kicked in, turbocharged it actually. And then on the other hand, all the industrials that I'm following, right? Okay, so on the retail side, Walmart, kind of breaking down today, UPS, all oil and gas related, obviously. I mean, these are massive downtrends, folks. Look at UPS, 122 to 96. Even the low end of the consumer side, Dollar Tree, 142 down to 104. These are all bear markets. This is Dollar General. Maybe it'll arrest this downside on the 200 EMA. Gold and silver crashed yesterday, and I think one of the reasons is probably there's talk that a lot of people, the Middle Eastern countries may sell some of their holdings, tons of gold and silver they have, may sell some of it to pay for all this that's going on for the repairs. And Iran is looking a little bit tougher not to crack than Venezuela, it looks like to me. So that's gold, silver. I mean, there's some support coming up here. But so I started putting a counter trend position on AG. Look at that thing, 32 down to 18, folks. That's a 50% move. Same thing is happening with Hecla, and especially if you look at the 2x ETF of the daily gold miners. Look at that thing, 320 down to 148. Now, you could say, yeah, I sell puts, I sell calls. There is no amount of puts and call premium you collect that is going to help you in a downtrend like that. We're coming into support. Maybe at 125, I'll put on some put credit spreads, but other than that, you just gotta wait. You gotta be patient. Catching a falling knife is not the proper thing to do, but a lot of people seem to love that kind of shit, right? Especially like there was big talk. There was a big bearish report on SoFi. They probably floated that report to cover their short. Here's SoFi. No, it's not SoFi. This is SoFi. Okay. All right, so stock 33 high, 17, literally 50%. And people go, we love SoFi. I'm like, okay, good for you. Not for me. Not at the moment. I'd rather catch SoFi from 20 to 30 than buy it here, ride it to 12, and then hope to break even. There's a lot of folks do that. They just like they love the roller coaster. You know, they just go up and down, up and down. Same thing they're doing with Hood. My stock is in a goddamn downtrend, man. Stock is just down 50% plus. You know, how many all the puts and calls you sell is not going to save your ass when the stock goes down 80 points. You know, they go, yeah, it's all puts, it's all calls. They go, look, my calls are printing, my puts are printing. Nothing is going to print because you're accumulating unrealized losses. They're fools, man. They're just a bunch of fucking fools. They either don't understand math or they're just doing it for clickbait, which I really don't give a shit. So here's the Bitcoin ETF. Actually, Bitcoin is holding reasonably well with what's going on. Although we did come right into resistance. Is this another leg we're building to fall off of? It looks like it. It's bearish. You know, here's Ethereum. That's why I want to get rid of BMNU. But here's Ethereum ETF. I mean, if that doesn't look bearish, I don't know what looks bearish. Although all the fools about BMNR drawing chopsticks have disappeared on X. I think they gave up on Tom Lee. So, you know, I'm looking at carefully things and just kind of picking my spots. And when they get there, I'm executing. And if I need to take a small L, I'm going to take a small L before it becomes a big L. So I started buying calls on ACO. I mean, look at that thing. Earnings were great. Everything worked well. 144 high. Stock is 110. Same thing with Deer, although Deer is more expensive. Same thing, right? 674 high. 575, down 100 points. Well, I like ACO a little bit more than Deer. Deer is a little expensive for me. So I'm buying some calls. And we're hoping we get a bounce play out of this. If we don't, we take our little L and we get the heck out of Dodge. What else is going on? Yeah, that's about it. So SPX has just been going sideways. I don't know how it's going to resolve itself at the end of the day, but we're just stuck in this 20 handle trading range intraday. Here it is. We're just kind of, are we going to break this fall off of yesterday? We had a ripper rally right at the end of the day. Well, maybe like an hour. Started at noon and then that was a massive rally. Is it going to happen again today? We don't know. We'll see. Very neutral, really just kind of going sideways. Or are we going to fall off of? I think market's going to probably short-term bottom on Tuesday sometime. My call is as good as anybody. So let's say Tuesday at 9 a.m. Pacific, I think we'll bottom somewhere. Short-term bottom. Have a rally into resistance and then roll over again. If this is a multi-leg down move, folks, watch yourselves because it looks like we have rolled over. We're breaking all the support levels according to chopsticks. Again, chopsticks are chopsticks, but MACD now is accelerating to the downside under zero after hanging above zero for all these months. You got to pay attention to momentum. Momentum cuts both ways. But that doesn't mean the stocks are not going up. There's like stocks like AXTI that I follow. Look at this, right? Why don't you just trade those, folks? Why don't you sell puts on those as opposed to selling puts on shit that's going down? You know, because people are just this wheeling thing that they do. It's like fucking ridiculous. Wheeling only works in a bull market. Wheeling doesn't work in a bear market, folks. And Nvidia actually today is breaking the 200 EMA. Right at it. Now, not breaking. We're right on top of it. Is that the next general that's going to get shot? Because Nvidia is trading literally what it was trading last July. So we'll see. I mean, all the good news is not getting these stocks up. Earnings, good earnings, like Micron, for example. Amazing earnings. Stock went down. I mean, is it bearish? No, not at all. But I'd rather trade Micron than, trade, I don't know, Hood, for example, right? Okay, so all the industrial metals, aluminum, AA, pulling back into support. Freeport McMoran, copper stock pulling into support. There's one name I like. I mean, that stock was 70. Now we're down to 50. Right? These are all massive pullbacks. I like ERO copper if you're still bullish on copper. But if the economy is going to slow, you need to be careful with that. Here's ERO. You know, there you go. Right at 200 EMA. If you're going to do something, this is the time to do it. It's into support. Stock was 39. We're down to 24. That's about 30%, 35% haircut. But my question is, what's going to happen to all these stocks if SPX goes down another 10%, which it could easily, right? So what's going to happen, right? This is the other side of the hill, folks. So we walked up the hill. The only good thing that's happening is kind of orderly sell-off. It's not like a little crash like it happened in April here, back here. So, but sell-off is sell-off. Grinding sell-offs are the toughest ones to deal with. And we'll see. We'll see what's going to happen. But don't oversize. Make sure you wait for your spots. Markets open every day. Don't revenge trade. Don't do any of the stupid shit a lot of people do. So, all right. Let's see if there's some questions. Yes, I heard just that. That's sad. Rest in peace, Chuck Norris. How old was he? 80 something? Was he 80 something? Yes, I agree. Chuck Norris died today. Or last night, whenever it was. I don't know how old he was. Well, he always looked like in good shape, right? Even in his infomercial in his 70s, he looked like, I'm going to be turning 59, folks, on March 29th, coming up in 10 days, 9 days. He definitely looked better than me. So what else is going on? Any other questions? No questions. And I can already tell the audience is small today. When the market's going down, I do have a Telegram chat group. It's absolutely dead silent. It's cricket in there. I texted it this morning. I put a post up saying either you all blew your accounts or, we're all losing money and then we're just kind of moping there, or we're sleeping it off, one or the other. And usually the chat's flying. It's, it's very active. And today, nobody's talking, crickets. And I can already tell, I don't know if YouTube and X is doing this at the same time, but usually I have like 60, 80 people watching. It's like it says 19. So when markets are this way, right, this is what separates the men from the boys. And the boys are quiet. I mean, yeah, Doug, I know it's a quiet day, but, we got to do what we got to do, right? So, yeah, we just got to wait until the end to see, to figure out what's happening with some of those options expiring today. I have a whole bunch, so we'll see. We'll see. I mean, I know one thing, ZSL is going to get called away. And the rest are just small to nothing, and just cut exposure a lot. I took some small L's and cut them all off. Thank God I did, because they would have been much bigger L's. And the only one I'm watching close is AAOI, because I have an Iron Condor there. It's a wild stock, man. Wild. I was worried about the call side this morning, the call credit spreads. Now I'm worried about the put credit spreads, like in the same day. It's crazy. So we just have to wait until the end. I don't know what they're going to do with SPX today. I didn't day trade the zero DTEs, although a lot of people posted 1,000% gains yesterday on zero DTEs. Good for them, I mean, it's something, when I'm not doing any swing trading, it's probably something I could pay attention to. I'd opened a small $5,000 account for day trading purposes only. And, maybe I'll just, if I blow that, I blow it. I'm not going to concern, because the moves on SPX intraday are incredible. I was watching actually yesterday when 6,600 calls last hour went from 95 cents or $1 to $25 in literally like half an hour. I mean, think about it, folks. Shoulda, woulda, coulda, of course. But if you just bought like 10 of those calls, put up $1,000, that turns into 25K. And nobody's probably going to hold it all the way there. But even if it goes to 10K, right? I mean, come on now, 10X, 20X. It is possible. If you catch one of those, you'll make up your year, both sides, on the way up and on the way down. So what else? That's about it. So crowd is small. I'm going to... what else? That's about it. I don't know. Yeah, we're selling off now. I mean, if this is a leg to fall off of, I don't know. Maybe I'll just keep it on and, Maybe I'll just keep it on and see if we can do something with this. Now we're 88.61 on AAOI. Holy shit. Come on, man. Just hold your shit together. I have some orders to buy more ACO calls at 110 and 1. The rest's not much, man. Not much else is going on. BMNU 195. I was hoping to stay at 2, but then the next round, I mean, 50 cents every month on selling calls on this thing. That's pretty decent. But BMNU, how much are the Aprils? Yeah, at this point, Marches are going to expire. Watchlist, I sold them at 51 cents. 5,000 shares is $2,500 a month. I mean, if you sell calls, like they're not bad. They're 35, 40 cents on any bounce. That'll be 50 cents. I'll put those out again. Okay, I thought that maybe like they're nickels and dimes. No, they're not. They're pretty good. 185 IV. Okay, I hope I don't get called away then. You know, let's just sell another round of 50 cents. 50 cents a month. It's good money. You know, it's good money. I know ZSL is definitely gone. That I know 100% it's going to be gone. Yep. Yeah, silver just fell off the bed. Fell off the back of the truck last couple of days. I still think it's going to be in some sort of a trading range. I mean, SLV is about 60. So maybe we get down to 56, 57 and get a bounce play out of that. But a lot of stocks are just getting killed. I mean, there's no ifs and buts about it. And if you look at, you know, Max 7 is all under 200 DMAs. Those are all bearish things, folks. I mean, you know, don't kid yourselves. I mean, look, long-term markets go up. I'm not questioning that. But, you know, it's not a stock market. It's a market of stocks. It's what your stock is doing. So if you're holding hood at 154, or if you, well, okay, first of all, let's just be fair and clear about this. So last April hood was $30. Let's say you nailed the bottom. You bought it at 30. You rode it all the way to 150, 154. That's 5x in literally 5 months. It was April low was 30. September high is, October high is 150. That's 5x. If you're not taking that money, because a lot of fools, what they do is, you know, on Twitter and social media, they go, oh, I'm selling calls. Yeah, you probably sold calls at 35 and didn't participate in any of the 5x, left it all on the table. And on the way down, now you sold puts, you got to sign that. So let's say if you went from 154 to 100, you go, okay, down 30%. Let me sell some 100 puts. Now what? You got to sign. Now what? Now you're down another 30%. So you know, these fools just fuck up on the way up and on the way down. Okay, where do I see hood going? Okay, all right, so hood's down 50% from the high, but it's up 100% from the low, right? So is it going to take a round tripper? I don't know. We'll find out, but it doesn't look good. And hood also has become a crypto proxy, actually. And it's moving with Bitcoin literally tick for tick. There's definitely an algo running there, you can tell. And so I don't know why. I think it's unjustified, but then it is what it is. You got to listen to the market. Is hood expensive here with $2 earnings this year? Yeah, 30 with 10% growth forecast. Why should it sell? This is fundamentals now. Why should it sell, right, at 35, 36 PE while you have 10% growth? You should probably sell 20 PE. And, you know, people are paying for it. They're doing the same thing with SoFi. SoFi is still expensive here. And it was extremely expensive at 155 on hood and 35 on SoFi. SoFi is still expensive. They're going to earn 60 fucking cents this year, selling 30 times for a financial. And people just convince themselves, create biases saying that, oh, SoFi is not a financial. Well, what the fuck is it? It's a bank. But anyway, so hood isn't another broker. Well, look at the difference between hood and Schwab, okay? Here's Schwab, holding like a champ. Okay, stock high 107, we're at 94, down 10%. Hood down 50%. Bull down 50, 60%. Or interactive brokers, let's see that one, right? Yeah, okay, 79 high, stock is 69, down 10 points, like about 12%. Hood down 50%. What does that say, folks? What does that say? Even in the same sector, if you're in the wrong stock, you're in the wrong stock. So stop crying. Buyer beware. The shit's expensive. The shit's expensive. And Wall Street about 2 months ago actually decided not to pay for growth. Everything is getting shot that has no earnings, or that has earnings but way too expensive. Definitely PE contraction going on. And now with this oil thing, who knows? All bets are off now. Where is Hood going to be if the market sells off another 10% here? Is it going to go to 100? No, it's probably going to go to 50. Maybe at that time, we'll take a look. But all I'm saying to you is that understand the risks. If you don't understand the risks, don't trade. And if you're in this, if you bought Hood at 30, and let's say you're still holding, you're still up 100%. Great, fantastic. Nothing to complain about, right? But why ride the roller coaster? Now you're going to say, how do you know 154 was the top? You don't know. But it's clearly now in a downtrend. It's in a bear market. You had so many chances to sell Hood. Okay, rule of thumb, don't buy anything under 200 EMA. Well, look at it, right? Same thing with Tesla now. All the Tesla boys just broke down. I was long TSLL. I took my L and got out. That's it. Now we'll see at 350 what happens to Tesla, right? I mean, look, man, things are selling off. You just need to be careful. You need to make sure you understand the risks. Because people don't understand it. They go like, oh, stocks only go up. I'm like, no. And then there are people who just trade these power generators for the AI data centers. Oklo, for example. Yeah, I shorted that thing at 185. And not 193 down to 54. Yeah, I sell puts, I sell calls. Okay, well, there you go. You deserve it. No amount of call selling is going to save your ass when the stock goes down $140. It's just not going to happen. But again, right, Oklo was a $20 number in April, okay? Went to 195. Was it justified? Absolutely not. But momentum is a weird thing. And now still a double plus from where it was in April. Still, if you bought it and you're holding, you want to ride this roller coaster, you think one day it's going to go to 195, by all means. But I don't think a lot of people bought it then, So that's the problem. A lot of people on the way up bought this thing and are just holding the bag, hoping and praying now that they just go back to break even. Those are the things that I just try to pass along to my crew and understand the risk on the downside, man. When shit starts sliding, the other side of the hill is really as slippery as the part that you went up on the hill. So know the risk, understand the risk. Just because the price is down on something doesn't mean it cannot go lower, right? And to me, that's the key. You just have to understand. My long-term port was doing great. Now it's like, Lulu, UPS, Netflix. Where's Netflix these days? It's kind of holding. Actually, that could be a buy here, pulling back to 50 MA. Yeah, UPS, I'm long at 96. Lulu, I'm long at 182. I'm eating it there, down 10% or so. Yep. UPS, I was long at 96 and back to 97. It was at 125. Those are long-term holds. Google, same thing. Kava, I'm long at 58, 59 range, 85. I'll take it. Doing fine. Google, I'm long at 152 from April. I sold the May 350s to put me in a long-term capital gain situation. I took in $26. That's when I sell calls. So you wait for the stock to double and then you sell calls. You don't sell calls at your money or at your break even, and then you roll and roll and roll and roll and roll. You just gave up all that upside. So for fools who like saying, I sell calls, I sell puts, come on down. Let's talk about it. They haven't seen a bear market. This is not even close to a bear market, folks. This is like orderly kind of a fucking sell-off going on. Fierce rotation going on, without a question. So, and here's oil, USO. I mean, 122.41. It keeps rallying. And then when that rallies, what happens to SPX? Algos get triggered, and then it just gets selling off. So just put one corner of your screen if you have multiples or whatever. Oh, yeah, we're just making lower lows now. Yeah, on one corner of your screen, put USO. On the other one, buy puts when USO is rallying on SPX, and buy calls on SPX when USO is selling off. And yeah, this is not looking pretty, folks. So, but anyway, and let's see where we are. Let's see, it's 10:45. Today, 0 DTEs. We're at 65.36, 65.50 now. If you're going to trade anything, every 2 hours you got to switch to a lower strike if you're going to take directional bets, folks, because decay is a killer. Decay is an absolute killer. So 65.50 or 660. Those are the ones. 2 hours ago, you should have been trading 65.75. Before then, 6600. So they're down to 656 was the low. I may give that a crack, actually, if we sell off a little bit more. We're kind of into support now at 6,500. 36 handles away. Yeah, I think. Yeah, it's the 2-minute chart. It's looking ugly. So all this was like a digestion. VWAP walking it down. Roll over. 10-minute, 10-day. Not looking that good either. I mean, lower lows, lower highs. What does this say? And 30-day, 1 hour. That's a downtrend, folks. Yeah, you do get rallies. But then everything is being supplied with stock and everything is sold off. Yeah, I think we'll bottom. You know, we'll hit 6,500 right here. This is 6,500. We're getting close. This is the old highs here, lows here. If we take out 6,500, yeah, I think ultimately we'll probably end up at the end of this. We may get down to 6,200, which will be a garden variety 10% correction on the indexes. You know, there's always opportunity. You don't have to do anything today. You just wait for your turn. If you're short the market, great, you're making money. But not too many people short the markets. They don't like shorting. Well, yeah. So, all right, I'll answer a couple more questions and get out. Yeah, why can't you be a bear? Am I a bear? No, I'm kind of neutral at the moment, but it's definitely, we're having downtrends. Everybody's having drawdowns. Vartan, good morning. This whole year will be downtrend chop. A stupid war Trump is. You already made your decision? Okay. If Bitcoin stays over 60, Hood will be all right. If Bitcoin goes to 30K, Hood is cooked potentially. Yeah, Hood definitely is trading like a Bitcoin proxy. If you look at the Hood and, I mean, we can look at it, but if you look at the Hood and IBIT, which is the Bitcoin ETF, they're literally mirror image of each other. So here's Hood, okay, and here's IBIT. How similar are those two charts? I mean, to the day, it topped there. So IBIT topped at 71.82 at 125K on Bitcoin, and that was start of October of last year. And when was the top on Hood? Just the same exact fucking day. So there probably has been a correlation that I didn't figure out for a while, but then it became very obvious when the stock broke like 110. And it's identical. It looks identical. So if Bitcoin doesn't move anywhere, although Hood's crypto business is only 20% of their business, I think it's kind of unjustified, this much sell-off or this much correlation to Bitcoin or Ethereum or crypto in general. It's only 20% of their revenue comes from crypto trading. So it looks identical. Hood and there's Hood and there's Bitcoin. Identical charts, honestly, you know? So, yeah, I agree with you there. If Bitcoin gets to 30K, Hood definitely will be into the 20s, 30s probably. So, well, it'll be a round tripper. 30 to 155 to 30, maybe. I don't know. See, this is the problem. When the war ends, bear market probably ends. What bear market are you talking about? Market's down 5% from, in the indexes, if you say market, indexes are down 5% from all-time highs. That means you have not experienced a bear market. April was a crash. That wasn't a bear market. The true bear market we had was probably in 2021, before we came out of that, when we were raising the interest rates, that drag it down 25, 30%, right? 5-leg down move. That's a kind of a bear market. But the true bear market, I mean, if you really want to talk about a true bear market, it was in 2008. That's a true bear market. There have been plenty. Luckily, they only last 18 months, but they go 40, 50% on the indexes. Indexes are down 5%. I don't know. I mean, again, you know, it's not a stock market. It's a market of stocks. So, what we're saying about changing the strike to every 60 minutes due to decay. So if you're going to trade 0 DTEs, let's say from 7 a.m. to 9 a.m., let's say, okay, so let's say index is at 65.60, okay? You should be trading 6,600 if you're going to do within those 2 hours, because decay is not that bad. Then if the index stayed and moved to 65.50 from 65.60, now you should be trading 65.75s if you're going to do day trade, and 25 out from the strike. And then now at 11 with 2 hours to go, and index is at 65.30, let's say, you should be looking at 65.50s and 65.20s, because that's the range we're talking about the rest of the day now. Because if you do like what happened yesterday doesn't happen that often. It happens maybe once a month or whatever. That 50-cent calls go to $20 because the rip was so strong, right? I mean, look, anything is possible, but if you're going to day trade actively, that's what I'm trying to say. That's what I'm trying to say, right? You got to adjust your strikes when you're day trading SPY or SPX calls or puts. Bear and bull markets just follow these macro events and Fed decisions. Well, the Fed is powerless. Fed cannot do anything about it, but I'm definitely paying attention to macro, what the effect of high oil, because high oil prices is not just about gasoline. High oil prices affect everything, right? Transportation costs, massive, right? All goods prices are going to go up. Is it going to bring inflation back? Is the consumer going to slow down discretionary spending? And what's going to happen to the general economy? That's the problem here. If this is over this weekend, yeah, maybe we'll get a relief. But if this goes on and oil prices stay here, because we don't know how much damage has been done, because they're supposedly bombing each other's refineries and you know, oil facilities and LNG facilities. It could be a global effect, right? And we know how much leverage is around the globe, and you know, because one domino falls and then watch out. So there's definitely potential of that I'm watching for. I'm watching for sure. Yeah. Well, Fed cut the rates 50 basis points in September, and on that the same day, market sold off like severely. And Fed has cut the rates short end of the curve. The Fed funds rate, I think, by a total of 150 basis points so far. And the long-term rates are higher than what they were. And the proof is in the pudding, because I don't say shit out of my ass, unlike some people on X and whatever. So let's take a look at that, and then we'll say goodbye after that. So this is TLT, folks. TLT is the 20-year inverse, 20-year bond inverse ETF. So that's why I like charts. When I look at that, look at the 20-year going shooting higher today. And the long bond vigilantes are watching this very close, thinking inflation may come back. So let's look at last September. This is the first time the Fed cut the rates. This is September. TLT then was 91. This is the 20-year bond. So TLT is an inverse indicator. So if TLT is going down, actual interest rates are going up, actually. So if TLT is going up, actual interest rates are going down. So on the 20-year, they cut the rates. TLT went down. That means interest rates went up, actually, a little bit. Then we had a little relief, but the Fed started cutting the Fed funds rate at 91. TLT today is at 86. That's like 50, 60 basis points higher on the 20-year than when the Fed started cutting rates, because the Fed cannot control the long end of the curve. It's just too big. They can control short end of the curve. But since the war started, we were at 91 again, We were actually, rates were going lower. Everything was looking good. But when the bomb started to drop from 91 to 86 on the 20-year, the rates went up 45 to 55 basis points. So what does that say? That means mortgages are more expensive. Auto loans are going to be more expensive. Everything else that you buy on loans is going to be expensive. So this is what the bond market is saying. Bond market doesn't like the war. Bond market is increasing the rates. The US dollar, right? They don't like it. This is the dollar index. So, watch these things, folks. Dollar index actually is rallying now. Dollar is rallying because interest rates are going up in the US. The Fed can cut the rates or not, doesn't mean shit, right? Dollar and higher dollar is also bad for the US stock market. So there's many, many bogeys out here for us to watch. And for me, the important thing is, look, man, if you're not short, stay the F out. Wait for your turn. There will be a turn. Just stay for your turn. Wait. Keep your shit together. So now we made a lower low. We're just kind of bouncing up, bouncing right into resistance. So let's see if we can do a lower low here, and then MACD doesn't make a lower low on the 2-minute. I may do a little day trade actually. So that's it, folks. I'm not a bearer of bad news. I just talk reality, and because a lot of people don't talk reality. A lot of people talk out of their ass. And you like it, you like it. You don't like it, you don't like it. Okay, you don't know what you're talking about now, the fund. What rate hikes, bro? There's not going to be any rate hikes. The White House is going to run the Fed. Powell is gone. There's no rate hikes. The bond market is selling off because Fed cannot control the bond market. That market is way too big for the Fed to control. Fed can control the short end of the curve. Long end of the curve is going to do what it's going to do. And nothing is getting priced in like that. Not a thing like that is getting priced in. I don't know where you get these ideas, but I appreciate you showing up. So anyway, all right, with that said, I'm going to go have a cup of coffee. Maybe I'll do a little day trade. We'll see how it works. So with that said, keep cool. Keep your shit together, folks. This is easily you can blow accounts in this type of market. So just live for another day. That's the whole idea here. If you're not short, you're not making money. Okay, you give it a shot at a point that you think is valid. Then it's up to Mr. Market. If you have a small L, take it. Small L's are better than large L's. So don't be a hope and prayer. Don't turn from a trader to a long-term investor, because that's what people do. All I'm saying is that live for another day. Keep your powder dry. That this will come to an end. And then if you're only bullish, then your time will come. But at the moment, if you're not short, there's nothing for you to do other than turn the computer off and go away. Right? Markets open every day, man. Markets open every day. So that's the best advice I can give you. If you're not subscribed, please put a thumbs up and subscribe to the channel. I appreciate the support. Please go to my website, www.sergioavadian.com. There's a free newsletter that we send out every Monday at noon. It's really well done. You'll learn quite a bit. And it's for everyone. It's for novices, newbies, new investors, because I want to improve financial literacy in this country. And that's about it. We'll see you guys on Monday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. With that said, I'm getting tired of the red hat. Market gods, let me have a green hat day, please. You know what I mean? But okay, here's my call. Tuesday, 9 a.m. market bottoms. Monday will be, if we close on our ass today, Monday will be ugly. Or maybe Monday, 9, 10 a.m. Right? Somewhere we're coming up, because I watch other indicators that most people don't even have a clue about, such as the McClellan oscillator, such as the summation index, such as the PMO index, and all these other things that have, proprietary formulas, and they're getting pretty oversold. So short term, I don't think it's over yet. I think if this war thing goes on, oil prices stick around 110, we have pain. We have pain coming up. Here's one. SWKS, buddy. That's my DV for you. I'll share it to you. What's SWKS? The stock? I'm not sure. I don't know. Let's take a look. Everybody is a stock picker these days. Hold on a second. Skyworks? Is it Skyworks? SWKS? Yep, I knew it. What about it? I mean, it's not a horrible chart, but, you know. Oh, well, this is the intraday. What am I looking at? I'll bet you this thing is down a lot. Another bottom picker. Horrible chart. Garbage. Wouldn't touch it with your money. Good luck, though. It's the same one as people with PayPal and shit. Oh, yeah. You get stocks making lower lows, lower highs. People just like... Stocks get cut in half and people think it's cheap, right? What do you think happened to SMCI today, folks? How many of those are picking the bags on that one? Bro. No wonder. All these new bull market babies, they only think stocks go up. Why is SWKS is a good deal here? Because this guy approaching its April low? Maybe. How long have you been holding SWKS? Did you buy it yesterday? You had no position before? Because if you sold puts, you got assigned. Now you're in hurt. And all I know is 90 to 54. Okay. It's down 60%. No, it's down 40%. Right? 40 points, 35 points. Yeah, okay, 40%. What makes it a good deal here? Under is 200 EMA, lower lows, lower highs. Not for me, but I appreciate it. Thank you. You know, it's like all these fools telling me, oh, look at Adobe, buy Adobe. I'm like, why would I buy Adobe? Look at this thing. Why would I even mess with it? Like, people go like, it's cheap. It's down 50%. I'm like, okay. No, thanks. CRM, same thing. Down 50%. ServiceNow, SWKS guy. I'm giving you all these names. See, they're all down 50, 60%, right up your alley. Why would I mess with it? Right? I mean, Duolingo. Yeah, I don't want to mess with any of that. I don't want to catch too many falling knives. You know? I'm not good at it. Maybe some of you are. I'm not good at it. I don't want to get slashed. There's Duolingo. 550 high, stock is under 100. I sell puts, I sell calls. Okay, good luck. I'm just not for me, sirs, madams. Good luck to you, though. I hope you guys do well. I hope you all do well. Okay. All right. I mean, look, man, that's why we have a market, right? I wouldn't touch it. It's not for me. It pays dividend anyway. All that stuff. You're just creating biases. I'm not arguing with you. A tree leaf AI. All I'm saying to you is that you sound new. Understand the risk. Okay. It will go up next year. And while you're waiting for that to come back to your even point, you missed the whole world. You missed opportunities, right? That's all I'm saying. Understand it. You think a little deeper. Okay. Yeah, Uber, I wouldn't buy either. 1 year out. Okay, so from today, 1 year out, SWKS will be higher. If the market's 10% lower, SWKS, I don't think will be higher. But again, that's why we have a market. That's all I'm saying. All I'm telling you is, if you're holding the bag on the stock, if you paid 70 for it, it's 54. Now you're selling cover calls, you're doing this, doing that. It's just going to be a while, right? And, you know, what's going to happen to SWKS if the market sells off another 10% here? Is it going to go higher? I don't think so. My thing is, I just don't want to catch falling knives. Once in a while, I'll do a little counter transaction, snap back, right? Because if things get too parabolic, there is a mean reversion trade. And if things get parabolic on the downside, there isn't a, snapback effect, rubber band theory, right? That's once in a while. If you have good feel for the markets, you just kind of put a trade together, again, with downside limited risk, that kind of a thing. And then, you do it. And if you take an L, you take an L. If it works, it works. It doesn't. But when things are going down for months and months and months and months, and if they're in their own bear markets, I don't want to do it. I want to look at rotation. Okay, oil is working, buy some oil stocks. figure out the rotation. You don't have to be in the same stocks, you know? I have an example of Goober lowering the price, but I put it in the short. I don't know what that means. Oh, okay. That's a different channel. This is the finance channel, but I appreciate you coming on. So, all right, folks. I'm going to go have a cup of coffee. I'm tired of the red hat. Not much we can do about it. We just got to, hold our shit together, survive this, have powder dry so we can attack, right? And after that, we'll see. Do I short too? Yeah. Yeah. Yep. You got to short. Because if you don't short, how do you make money on the way down? Or are you just going to sit it out for a few months and then, put the gas on? But even, see, my suggestion to you, Tree Leaf AI, is going to be create yourself some scanners. Even last, let's say, 3 weeks, market's selling off, everything is selling off, right? There are stocks that are making 52-week highs. Find those. You got to do some work. I'm not going to feed it to you, but you have to short. Like you have to sell some call credit spreads. I wouldn't sell naked calls, but that kind of thing. Just you can't make money on the way down. That's all I'm saying. Anyway, so yeah, you have to learn how to do all that. You have to have a full toolbox to deal with these types of markets. Anyway, all right, I'm gonna come back on Monday. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Stay healthy. Have a great weekend. Markets will. Okay, see. Really? I hope you're short that one. Being big on Alta. I hope you're short that one. If you're not short that one, God help you. Yeah. Yeah. It only went down $85 in a day, so after the earnings. Stock is down like a couple $100. I hope you're not long that one too. Next year it'll go up. Maybe it will. Anyway, I can't do any of that. I'm not good enough to catch falling knives. So, but I wish you all success. Live for another day. Survival is the key at the moment. Not making money. Survive. Yeah, things will turn, and then we'll make some money. All right. I'm going to go have a cup of coffee. See you on Monday.